China is currently experiencing a catastrophic failure in its economy, and it's not just because of one reason. A myriad of factors has formed together a perfect storm that could bring China's economy to the ground. Investors like Cathie Wood are now starting to pull their assets out of China. But why is this exactly? Does Cathie expect a full-on economic collapse in China? In this video, we will examine why China's economy is in such big trouble, and how the US and the EU are directly related to this. Thanks for supporting our channel. Let's get right into the video. China's real estate industry, which supports the country's economy, appears to be set to crash. In an effort to salvage it, the government is investing hundreds of billions of dollars. But this will only be able to mitigate the catastrophe rather than prevent it. Even if China is able to pull off some sort of economic miracle and recover its property market, the problem is by no means over. How long will the Chinese economy last? What caused the impending collapse of the Chinese economy? For what reason are wealthy foreign investors like Cathie Wood liquidating their Chinese holdings and fleeing the country permanently? We shall discuss the answers to these questions in today's video. Even though China has a long and storied history, it has been ravaged by foreign powers like Europe and Japan during the previous few centuries. Millions of people in China went hungry because of widespread poverty for the majority of the 20th century. Between 1959 and 1961, famine was responsible for the deaths of 15 to 55 million people. China's Great Famine lasted for several decades before Deng Xiaoping took control and instituted sweeping reforms. China was cut off from the rest of the world because it refused to engage in trade and viewed foreigners with great suspicion. Deng Xiaoping, on the other hand, made the decision to expand China's economy beyond its borders and established special economic zones so that foreign businesses can enter China and take advantage of the country's low-cost labor force. For the majority of Chinese citizens, toiling away in a factory for 16 hours daily is a preferable alternative to starvation. Businesses flock to China, and the country's commercial hubs, including Shenzhen and Shanghai, are now among the world's wealthiest places. Over the course of 4 decades, China's gross domestic product increased from $191 billion to approximately $15 trillion. The entire world began to look to this place as its source of manufacturing. China produces a wide range of goods, from low-priced clothing to high-end electronics like iPhones. The United States continues to be China's most important trading partner, regardless of the political tensions that exist between the two countries. Its top 2 trading partners, the US and EU, account for over half of its annual exports value. Although $15 trillion may seem like a lot, China's gross domestic product per person is actually far smaller than you may imagine. With a GDP per capita of roughly $10,000, the country is classified as a developing nation alongside Russia and Turkey. In comparison to more developed economies such as Germany or the United States, China is still significantly far from reaching its full potential. Getting stuck in the middle income trap is a major problem for every growing nation. It's a scenario in which the country grows sufficiently prosperous that workers also become sufficiently rich. Of course, they'll ask for bigger pay. If wages are raised, production costs rise, and the country loses its competitive edge as a low-cost producer. It will quickly fall in the global economy. As a result, the businesses that originally moved to China in search of inexpensive labor will pack up shop and relocate to another country where labor costs are still reasonable. Bloomberg claimed just recently that Apple intends to begin iPhone 14 production in India after it had previously left China. Apple has been coordinating with its Indian suppliers to increase production, and the initial iPhone 14s made in India are expected to be completed in early November. India is in a similar position to China in the 1990s, and its investments in facilities are luring multinational corporations to relocate their factories there. Companies don't see the need in paying more when the same work can be done in India for far less money. Apple isn't the only company in this situation. US firms with Chinese manufacturing facilities are planning to relocate their operations elsewhere by 2020, according to a report by the UBS Evidence Lab. A wide variety of well-known brands like Nike, Microsoft, Dell, and Intel, among many others, also plan to do the same. US-Chinese relations are getting more tense. What kind of reaction do you think there would be from the United States if China opted to attack Taiwan? Of course, they will start off with sanctions which will greatly affect China's economy. As a result of these restrictions, how can American businesses keep running? Because of this, the majority of them intend to move their factories elsewhere. Even firms that are not based in the United States, like the Hyundai Motor Group, have taken action to move their production operations away from China. The US has been spending a lot of money on ASEAN. The United States is looking toward the Association of Southeast Asian Nations as a possible region in which to relocate American businesses. No country will risk remaining in China following the harsh sanctions the West imposed on Russia, which forced multinational corporations like McDonald's and Starbucks to sell their operations. Contrary to appearances, China is not necessarily financially secure enough to function independently without Western corporations. Even if certain businesses like BYD and Huawei have achieved a great deal of success, such businesses remain extremely reliant on American businesses for the parts their products require. For instance, Huawei expanded so rapidly that it consistently outsold both Samsung and Apple to become the world's top smartphone vendor. Unfortunately, in 2019, things went south after the United States slapped sanctions against the firm. Huawei may have clever engineers, but the company is extremely reliant on semiconductors, the most critical part of a smartphone. The majority of the businesses in the technology industry are American-owned. These businesses include Nvidia, Intel, and AMD, and a whole lot more. Even if TSMC, ASML, and Samsung are all global technology powerhouses, all three rely heavily on American software developers like Cadence and Synopsys to create their unique chip designs. Because of this, Huawei is fighting for its life after the United States imposed sanctions. Over the course of the next 10 years, China will face a problem in the form of determining how it will avoid falling into the middle-class trap and how it will produce new technology without depending on the West. When the majority of US corporations leave the country, would they still be able to accomplish this goal? This is only a small portion of the whole issue. Both of China's most important trading partners are on the verge of entering a period of economic contraction. The lack of Russian gas has caused speculators to flee Europe, sending its euro to a record low. Without the essential supplies, energy companies will be forced to close down, as has already happened to a large number of them in Germany, resulting in an increase in layoffs and a decrease in demand. The United States is experiencing its own crisis right now. The Fed's rate hikes have caused many economists to predict a slowdown in economic growth. In fact, there is currently a recession in the US. On the other hand, what does any of this have to do with China? For an economy like this one, where exports make up a significant portion of GDP, a financial crisis that reduces demand in its two biggest trading partners would be catastrophic. If this were the only issue, I wouldn't worry too much about it. However, with China's housing market on the verge of collapse and banks running dry of cash, a perfect storm of economic woes is brewing that threatens to plunge the country into a severe economic catastrophe. What are your thoughts on China's economy? Do you believe they could survive by themselves without any interference from the West? Give us your thoughts in the comments section down below. If you enjoyed this video, give us a like and subscribe, and we'll catch you on the next one.